Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar-cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. Geopolitical and monetary turnarounds swirling storm shook Wall Street this week. At the opening of Monday's trading, Fed Vice Chair Michelle Bowman hinted with surprising clarity that a rate cut won't be long delayed, and the June oil price surge may already be a thing of the past under the combined influence of these two factors. Tesla's share price soared by 9.7% after the launch of the self-driving taxi service in Austin. Meanwhile, the optimism shaking in the global markets exploded by Tuesday. Investors are pricing in loose financial conditions from imminent Fed cuts, with Fed futures showing over a 70% chance of a cut in September, while the dollar weakened and the yield curve flattened. After the late May peak in Iran-Israel tensions, an unexpected US-brokered ceasefire agreement significantly eased Middle Eastern risks. Crude oil fell below $65 per barrel by midweek, and energy sector stocks were among the biggest decliners. This was directly reflected in the performance of S&P 500 energy companies, while defense and aerospace firms benefited from increased risk appetite. According to a Reuters poll from China, the June Manufacturing Purchasing Managers Index, PMI, is expected to fall to 49.7, indicating contraction, rather than expansion for the third consecutive month. Meanwhile, May industrial profits fell 9.1% year-over-year due to weak domestic demand and escalating tariff war outlooks. This trend could be a significant signal for export channels tied to U.S. tech firms and act as a direct sentiment driver for the Nasdaq Composite. Compared to Monday's closing values, the S&P 500 rose from 6025.17 points to 6173.07 by Friday, the Nasdaq Composite from 19630.97 to 2273.46, and the Dow Jones Industrial from 42581.78 to 43819.27. The tech sector proved to be the main winner, driven in particular by AI and semiconductor companies, while energy stocks suffered the largest declines. Nike delivered an outstanding performance, rising over 15% on the final day of the week on better-than-expected quarterly guidance, while Tesla enjoyed a Monday rally off the self-driving taxi news. You could see that falling bond yields and the rapid easing of geopolitical risks brought successive highs to equity markets, yet the PMI data signaling a slowdown in China's economy and inflation risks generated by tariffs still hang as warning signs over investors. How do you see it? Will the Fed really deliver its first rate cut in September, or is the market overdoing the optimism now? If you enjoyed the summary, hit like, subscribe, and don't miss next week's deep dive. Did you also see which companies caused the biggest waves on the stock market in the home stretch of earnings season? At the forefront of the technology sector stood Micron Technology, which demonstrated strong resilience with its memory chips produced for AI data centers. In the third quarter, it achieved revenue of USD 9.30 billion versus analysts' expectations of USD 8.87 billion, and its adjusted earnings per share were USD 1.91 versus the USD 1.60 expected. In addition, the company guided to fourth quarter revenue of USD 10.7 billion plus USD 300 million, while consensus was USD 9.88 billion. Following the announcements, Micron shares rose 2% in pre-market trading. In the financial sector, Jefferies Financial Group's results reflected investor uncertainty. Its second quarter profit fell nearly 40% to USD 88 million. missing the USD 0.44 EPS forecast, while revenue rose to USD 1.63 billion versus the USD 1.56 billion estimate, and its advisory division revenue jumped 61% to USD 457.9 million. Market volatility in the first 2 months of the quarter weighed on deal flow, but activity picked up in May. After the release, Jefferies shares fell 2%. This week, there were no standout earnings in the healthcare sector. Johnson & Johnson's next quarterly report is expected on July 16th. Among consumer goods, Nike surprised the market most. The sportswear maker reported a smaller than expected revenue decline for the first quarter, sending its stock up 11% in after-hours trading. McCormick, the spice and flavorings company, reported quarterly net revenue of USD 1.66 billion, with volume up 1% and pricing up 0.3%, and adjusted EPS of USD 0.69 versus the USD 0.66 consensus. It reaffirmed its annual guidance of 0.2% revenue growth and USD 3.08 EPS, and its shares rose 4%. In contrast, General Mills reported USD 4.56 billion in fourth quarter revenue versus USD 4.58 billion expected, but exceeded estimates with adjusted EPS of USD 0.74 versus USD 0.71. However, it lowered its full-year profit outlook to a 10-15% decline from the prior 4.8%, and its shares fell nearly 2%. In the industrial sector, AeroVironment lifted the mood. The military drone maker reported fourth quarter revenue of USD 275.1 million, beating the USD 241.6 million analyst forecast by 40%, and adjusted EPS of USD 1.61 versus USD 1.39 consensus. Its shares soared 25%. In transportation, FedEx reported that its profit guidance for the fourth quarter missed analyst expectations, causing its shares to fall 6%, although actual quarterly earnings beat estimates thanks to cost cuts and export volume growth. It is clear that technology and the industrial drone market outperformed, driven by AI revenue prospects and defense orders, while consumer goods saw mixed macro conditions paired with weaker revenue and profit expectations. Financial firms' results were muddied by the volatile market environment, and in transportation, uncertainties around trade policy played a key role. Which earnings report surprised you the most this week, and what did you find most interesting about it? I believe in my portfolio containing chip makers and have not changed it so far. However, due to the significant price increases, I am already considering selling shares to realize profits and reduce risk. On a year-to-date basis, the return of my fictitious portfolio has far outperformed the result of a one-time lump sum investment in the S&P 500, but it also shows a significant advantage compared to the more balanced return achieved with the dollar-cost averaging strategy. In light of all this, I still believe in the long-term growth of chip makers, while at the same time I have moved closer to the decision to sell a portion of it in the near future, thereby balancing the portfolio's risk and realized profit. The attached images show the composition of my unrealized. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.